All right, I welcome you all here. It's a privilege to host dignitaries, a lot of you here. I'm really happy and I'm privileged actually, right? Um, Usually, I used to say that forest is not a get rich quick scheme, and that's on a serious note. So, it is something you work on, it is something you build, it is something you grow with, right? So, it is not something that you start today and you start earning money today, right? It's more like a skill. It stays with you forever. So I wouldn't want us to, come in here with the mindset of if we learn this thing today, on Monday we'll start making money, right? It takes time. You need to put in the work. Ours is to, just teach you, show you everything that you need to know, and yours is to go into your charts and practice everything that we show you here, right? Today I am privileged to host a very amazing person, and I just want to recommend him for everything that he has been doing in the forex industry, right? He is no other person than 4THMANONLYSON. I'll just make him the host now so that he would, continue from here.
All right. Good evening, everyone. My name is 4THMANONLYSON. So there's something I want to tell us before I start. So if you are just a new trader, and you find yourself that you are taking unnecessary losses, maybe you go to 15-minute time frame, 30-minute time frame, 5 minute time frame, you are looking for a quick trade and you are taking unnecessary losses. So I'll just advise you to stick to this four time frame I'm about to show us. So there are four time frame I want to show us. The first one is weekly. The second one is daily. The third one is 4 hour. Then the last one is 1 hour. So if you are taking unnecessary losses and you say you want to do yourself a favor, I just beg you to stick to this four time frame: weekly, daily, 4 hour, and 1 hour. So anytime we want to build our buyers, we have like every weekly. You come to Sunday charts, you want to build your buyers. You have to start your analysis from the weekly, and every time a new monthly candle, like every month, maybe on the first of the month, you want to start your trading journey, then you have to go to the monthly first and analyze your charts to analyze where the overall market is going to be for the month, throughout the month. That's how it used to be on weekly also. Maybe you come to chart on Sunday night, you want to build your analysis. You said, okay, you want to build your analysis. You have to start from weekly first. So when you build your bias on weekly, you will make sure that maybe you have know the direction from the weekly. Maybe we are bullish or we are bearish. Before you can confirm your direction bias on weekly that we are bullish, you have to move to a time frame lower. I'm going to show us an example, so I'm just putting us to first. You have to go to a time frame lower. You have to go to daily because daily is the time frame lower from weekly. You have to check. Maybe daily is aligned with your weekly. Same thing if you have already built your bias on Sunday, like you have already built your bias on Sunday, then maybe on Tuesday or Wednesday, you come to the charts, you want to take a trade or you want to build your analysis. What you have to do is that you also have to check your daily every day. That is your daily routine. As you also check your weekly and monthly, well, that is how you also check your daily also. Because every day you come to chat, you won't just go to 1 hour or 4 hours direct. Even though you have already analyzed this since 2 days ago, you have to come to the market every day. Even though you analyzed the market yesterday night before the daily candle closed, you have to check what previous daily candle is doing. You have to analyze your chart from daily. And when you analyze your chart from daily, you are not going to confirm your direction bias from daily that, okay, yes, daily close bullish, so we are moving to the upside. No, you have to check your time frame lower. You have to know maybe your 4 hours, because 4 hours is the time frame lowers for daily. You have to check your 4 hour that your 4 hours is aligned with your daily. Same thing as 4 hours. If you have a 4 hour key level, maybe you have already built a bias from daily, we are bullish or we are bearish. When price gets to your 4 hour key level that you want to use to buy or sell, you have to move to daily. You have to move to 1 hour to wait for confirmation also. So that is how these time frames works. And once you stick to this 4 time frame I'm showing you, you see that you are not going to take unnecessary losses, because once you build your bias from weekly, daily, and maybe you want to take your entry for 4 hours or 1 hour, you will see that before 4 hour candle will form, like 4 hour candle will form, like maybe in 2 places or 3 places. It's going to take almost like half a day or a whole day before you can see your setup. Sometimes you are not going to see a whole day or 3 days. It's going to take you enough patience, and once you find yourself you are having patience, you see that you are not going to take unnecessary losses. So let me walk us through how we can use all these time frame I'm about to show us. So let me put it back. Let's say we want to build our bias on weekly. Let's say we have a V-shaped key level on weekly time frame. We have a V-shaped key level on weekly time frame. We come to our chart on Sunday night. We said, okay, we want to build our bias. Then we see a V-shaped key level that is resting on weekly time frame. Then we see that price came into that V-shaped key level. Price came into that V-shaped key level. Tap into the V-shaped key level, reject, and close above. We have two conditions. Anytime you are building your bias on from weekly, we have only two conditions that we want to see that is met on that weekly time frame. First of all, we want to see candle rejection and candle closure. Candle closure matters a lot on higher time frame. Candle closure matters a lot on higher time frame. Daily, weekly, 4 hour, monthly. Candle closure is very matters a lot. So let's say we have a V-shaped key level on weekly time frame. Price tap into the V-shaped key level, reject and close above. You see that we reject and close above. So we see that two conditions has been met on daily, on weekly. Candle rejection, candle closure. So we know that yes, we are not going to be looking for, like, we know that our bullish momentum is going to be to the upside for the next week. We know that our bullish momentum is going to be to the upside. But are we going to start looking for buying opportunity? No. What are we going to do next? We are moving to daily time frame. Weekly reject weekly, we close above. We are moving to daily. We want to see two conditions met on daily. What are the two categories? We want to see either liquidity sweep and a break of structure, or a breakout. We want to see two things: liquidity sweep and a break. Okay, let me use another one. I don't want to. So we want to see sweep of liquidity and a break of structure, or a breakout to the upside on daily. We want to see two conditions. We have already known that on weekly that, okay, we reject from weekly time frame, weekly reject weekly, close above. We are moving lower, we are moving to time frame lower. We want to see a liquidity sweep or a break of structure, or a breakout on daily time frame. A breakout on daily time frame, this breakout on daily time frame, if you move to 4 hours, we are now going to see liquidity sweep and a break of structure. This liquidity sweep and a break of structure on daily time frame, if you move to 4 hours, what you are most likely going to see, you are going to see a Mososian breakout. So weekly reject weekly, close above. 4 hours give us liquidity sweep and a break of structure, or a breakout. Weekly reject weekly, close above. Once daily give us liquidity sweep or a breakout. It's not by force that these two is going to happen. One out of the two is going to happen. Either liquidity sweep and a break of structure, or a Mososian or a breakout is going to happen on daily. So when these criteria are met on daily, what we are going to do is that we are moving time frame lower to look for our buying opportunity. You can also take your entry on 4 hours. It's depending how you position yourself. It depends on the entry model you are using. Daily give us liquidity sweep and a break of structure. We move to 4 hours. We are looking for our buying opportunity or our selling opportunity. So that is the first way to build the bias. I want to show us the second way to how to build bias, because we have two types of way to build bias. We have key levels. We have liquidity, which is single candle as liquidity. So this is the first one, which is key level. I build the bias with key level. So now I want to build the bias with liquidity. Let me take all this thing out. So let's build bias with liquidity. let's say weekly time frame, we have a single candle formation forming on the weekly time frame. We have a single candle formation forming on weekly time frame. Then we come to the charts on Sunday night. We see that the previous weekly high has been swept. We see that the previous weekly high has been swept. Like this. This candle swept the previous weekly high. Like this. We see that the previous weekly high has been swept, then close below. We have two types of building bias. You can use key level, then you can also use liquidity. So this is the liquidity that we can use to build bias. On higher time frame, not lower time frame, you are not going to 15 minutes and build bias with with liquidity. You are moving to higher time frame. You can build this from daily, you can build it from 4 hours, you can build it for weekly, monthly. So that's what they call higher time frame. That is when we build our bias. In fact, daily, weekly, monthly, that's where you build your bias. 4 hours, 2 hours, 1 hour, that is for entry model. So let's say previous weekly has been swept, close below. We know that if previous weekly has been swept, close below, we know that our next target should be this low, because that is our most ideal place that we expect price to run to. No matter the market condition, even though we are in bullish market condition, we may take out this low next, then play out for any key level that is close to this key level before to this liquidity before we start to move to the upside. But we are going to see some reversal when the external range, this high of this candle has been taken. When the external range has been taken, the low of this candle, which is internal range, depending on the market condition, it may be external range. So the low of the candle is our next target. So as this weekly candle high has been swept, are we going to start buying selling? No. What are we going to do next? We are moving to daily. Previous weekly high has been swept. We know at the back of your mind that, okay, we are selling to the previous weekly low to take out the previous weekly low. Previous weekly high has been swept. We are going to take out the low. Are we going to start selling like that? No. What are we going to do? We are moving time frame lower. We are moving to daily time frame. We are expecting two things. As this previous weekly candle has been, the high has been swept, we know we are moving to the low. That is our next target for throughout the week. We know we are selling or we are buying, depending on the market condition. So the previous weekly high has been swept. We are moving to daily. We are looking for two things: liquidity sweep and a break of structure to the downside, or a breakout. We are looking for these two things. So in key levels, is the same way how to be biased with this liquidity, but is the difference is the candle closure. So the difference is the candle closure. So we build our bias with weekly. I'm still going to show us examples. So I'm just putting us through the process. We build our bias from the weekly. Weekly high has been swept. We move to daily. We are looking for two things: liquidity sweep and a break of structure, or a breakout. Once we find a liquidity sweep and a break of structure, then we know that our time frame lower is aligned, because if weekly is showing us that weekly high has been swept, that we are going to the low. If daily did not confirm, there is every possibility way that another candle can come outside, like another candle can open for the next week. Another candle can open for the next week, can open like this. And we can just see another candle. Once the daily did not break out to the downside, that we didn't see liquidity sweep and a break of structure or a breakout, we didn't see any of these two criteria, we can just see that the next candle will just open like this, do something like this, hold. Next candle is just we came and swept this low, because daily did not confirm that we are going to the downside. So we just see that the next candle is going to come and sweep this low. Then we'll see that the next week, boom, we move to the upside. So we are still bullish, because why? Daily did not confirm that we are bearish. Even though we are building your bias from the week daily, you have to move to 4 hours time frame to confirm that, okay, we are bearish or we are bullish. If time frame lower did not confirm it, just stay out of the market. That is why you can have like four pairs, five pairs on your watch list. If one did not present what you want, you move to another one. You don't have to be forcing in that, okay, weekly high has been swept. I must be looking for same. You must be forcing the trade. No, you don't have to force it. You stay out of the market. Just be watching. You are like hunter monitoring a goat or a anything. You won't just waste your bullets. You will be targeting anything you want till you enter your trap till you shoot. So weekly high has been swept. We are going to the low. But sometimes if daily did not confirm, just stay out of the market. Wait, you can move to another pairs. That's why it's good to have many pairs. You can move to another pairs. Okay, my daily did not confirm my weekly. So let me just wait. Let me wait to Wednesday or Thursday or Tuesday. But sometimes you guys will sometimes some of you want to post before and after on Twitter. Sometimes you guys want to post before and after on Twitter. So you will not be you will be forcing trade. You'll be forcing trade. Some of you don't even have patience. Like once you build your bias from weekly, bam. What you are doing is you are moving to 1 hour time frame. You are looking for a breakout. I don't understand. Your daily did not confirm that we are bearish. Your forward did not confirm, but you have already moved to 1 hour time frame. You are looking for a breakout. Asian low has been taken on my 1 hour time frame, so we are moving for the high. How come? Then you see that you take unnecessary losses. You will not be crying to your mentor or anybody that is taking you through that you have lost your money. They know that you are lack of patience. So I'm going to show us the example. Weekly high has been swept. In liquidity, how to build bias on liquidity. Liquid has been swept. We are moving to daily. Daily must confirm our directional bias that we are aligned with weekly. If you are building your bias on daily, maybe you have already built your bias on weekly. Maybe you are bullish or we are bearish. Then you move to daily time frame. Maybe you come on Tuesday because every day you come to the market that you must check daily candle, what the daily candle is doing first. That is your work. Every weekly that you come to the chart, you must check what is my directional bias for this week. Am I going to be continue buying or continue selling? Once you confirm, okay, I'm continue buying. That does not mean that you come to market on Tuesday, you are continue buying. No, the directional bias can change. So that's why you'll be checking your daily also. My daily is aligned. Where is my most recent breakout on daily? Am I bullish or bearish? Okay, I'm bullish or bearish. Okay, I'll move to 4 hours. I want to check my 4 hours is aligned with my daily. So that's how you build your bias. So I want to show us a few example. So let me show us a few example. Okay, let me start with USDJPY. All right.
Maybe after this one ends, we'll share a new link. Makes sense, right?
All right. Yes, it makes sense.
Right.
So let's move to the line chart. Let's say we want to build our bias together on weekly time frame. So let's move to the line chart. What we want to know first on your weekly time frame is that where is our most recent breakout? Our most recent breakout here, most recent breakout on weekly time frame is here to the downside. Here. In bearish market condition, are we going to have buys? Yes. But is all those buys going to hold very well? No, because they are just retracements. You can't compare all this move here. Let me go back to candlestick. You can't compare all this move here, all this move here, all this move here to just this single move here. You can see that this one is just 3 candles. This is the main move. All this one is just the retracement. If you can't count that, they're almost like 30 candles or 20 candles. But this one, this main move here is just 3 candles. So where's our most recent breakout? Our most recent breakout is to the downside. Are we going to have buying opportunity? Yes. So we know that our most recent breakout to the downside when we have V-shaped key level here. So I don't want to run our time too much. So we know we are bearish. So we are now looking for selling opportunity. Are we going to say direct? No. And we said we have a two ways of building bias. We have key level and we have single candle as liquidity. So where is our liquidity? We can see that this single high of the candle has been swept. This high of this candle has been swept. The candle closed below. Are we going to, like, once we see this thing, are we going to start selling immediately? No. What are we going to do? We are moving to time frame lower. We are looking for two things, just two things: liquidity sweep and a break of structure, or a breakout to the downside. So let's move to daily. Let me move to line chart so we can see. When the previous weekly high has been swept, because this is where the previous weekly high has been swept. When the previous weekly high has been swept, what we see that daily give us here? Daily breakout to the downside here. We can see. We can see here, we have, let me say it. We have higher high, higher lows, higher high. Then we can see that we break out to the downside there. We break out to the downside there. Now we have a rest of buys as this daily also break to the downside. Yes, but is the buy is going to hold? No, the buy is going to be short time. The buy is to induce buyers. They are going to induce buyers. Then the main move is going to take them out. So we swept previous weekly high. Daily give us a breakout to the downside. When it did give us a breakout to the downside, we can see daily give us liquidity sweep and a break of structure. Then single candle very close to it. Daily give us. Let me move back to daily. Let me move back to the weekly. Sorry. So weekly high has been swept. Our next target should be this low. Our next target. We are not looking for buys opportunity. We are looking for sales opportunity till we take this low. So we take this low. And we are still having more liquidity. These are under liquidity here. Resting here. All this liquidity still need to go. So the previous weekly high has been swept. Daily give us liquidity sweep and a break of structure to the downside. So we know, yes, my weekly and my daily is aligned. So we are now looking for selling opportunity. We are looking for selling opportunity. Then we can see that we have our liquidity again here, very close to this QMR. We have liquidity very close to that QMR. Okay, let's say we have a liquidity very close to that QMR on daily because we build our bias on weekly. Weekly reject weekly. Weekly take out previous weekly high. Daily give a breakout to the downside. Liquidity sweep and a break of structure to the downside. So as daily give us liquidity sweep and a break of structure to the downside, we have single candle as liquidity resting close to the QMR. So are we going to sell again? Are we going to start selling set limit here? Are we going to set limit here? We can set limits, but is it okay to set limit like this? No. If you trade higher time frame, it's okay. It's okay to set limits. But for me, my daily, we are still going to build our bias from daily also. Our daily reject daily. We are moving to 4 hours also. Because we don't want to, sometimes price can do, see, if you set your stop loss here, maybe you are afraid, you set your stop loss here. You are still good to go. You target 1, 2, 3, you are still good to go. But are we going to take it trade like this? Let me just say no. We are moving to 4 hours time frame. Because we want to use our 4 hours for our entry model because we are using daily, weekly to build our bias. Daily, weekly, monthly to build our bias. We can use 4 hours for our entry model, 1 hour. You can even use 30 minutes, 2 hours for our entry model. So let's move to 4 hours now. Now we can see daily coming to this daily key level. Tap into the daily key level. We reject and close above. I said candle closure matters a lot. Daily come to this level, tap into it, reject and close above, close below. We are moving to 4 hours. We want to see two things on 4 hours. We want to see either liquidity sweep and a break of structure or a breakout to the downside. We can also look for a engulfing because that is what I use most. Once I build my bias from daily and weekly, sometimes I won't wait for a breakout or a break of structure on 1 hour or on 4 hours. I will just wait for 2 consecutive candles to the downside or to the upside that will create a open close. Then I will just let that open close to be disrespected. I'm good to go. Once I have built my bias on weekly and daily, So sometimes I don't wait for a breakout on 4 hours. I'm using open close. So let's move to 4 hours now. We want to see three criteria met. We want to see either liquidity sweep and a break of structure to the downside or a breakout. Then we can also consider open close because that is what I use most. That is what me I use most. Open close. So let's move to 4 hours now. Let's see. This should be for next week. Like for next week, this should be um the two places that price is going to run to. Let's move to the line chart. What can we find? We find um liquidity sweep and a break of structure. We can see we break here. We break here to the downside. We break from that place to the downside. Now, 4 hours and daily and weekly, everything are in sync that we are going to the downside. So if you are buying, just know that you are buying retracements. And retracement is not safe. Retracement is not safe. You can catch a retracement of 1 to 3. You are good to go, no problem. But retracement is retracement good to trade? No. Now we have already built our bias on weekly that okay, we are bearish. So now daily now reject daily. We are moving to 4 hours. We are looking for three things: either liquidity sweep and a break of structure or a breakout. Then the third thing I said I consider watching once is you are build or bias. So I don't say you should go and use it on higher time frame like monthly, weekly. It works on higher time frame but what I can recommend it for you is that on 4 hours, which is engulfing, like two consecutive candle. Maybe you want to buy. If you want to buy, well, you have to see two consecutive candles to the downside that will create a bearish open close. Then we want to see engulfing that will engulf the candle. Sometimes it may not be both candles. It may be one candles. It may be only one candle that will engulf the other one. Then we are good to go. So we are looking for liquidity sweep and a break of structure, a breakout, or a engulfing. So what can we find there? We see that we have a breakout to the downside. We have a breakout to the downside. Where's our breakout? Let me mark it out. We have a breakout here to the downside. We know we are pushing to the downside now. This should be either here, our next week now. This should be our next places that want to sell from. Either the most recent breakouts or a plug and play here that is being used for these sales. We can see we have a plug and play key level here, which is also a QMR. It's also a QMR here. We have a plug and play key level here that's sponsor sells 1, 2, God is expected the third time, and still sponsor these buys before God is expected again. So we know now we are looking to come back from here, maybe either use any of this level 1, 2, either any of these two key level. Then we are dumping to the downside. Where do we come from? We come from weekly. Can you see that we have patience? Imagine you are waiting for this trade. You have not even taken any trade. Maybe you are waiting for this, but it's not good to have maybe one pairs. You can have like 3 or 4 pairs. So in case one has not present what you want, you are still waiting. You can move to the other one. And I didn't say you should move to the other one. You should start looking for buy opportunity. You have to go to the same process because everything has to be inconsistently. Forex is not a thing that you just come, you said you want to make $1 million. Now. You are just going to go back home empty-handed. This forex is very lonely. Like once you know what you are doing, you see that you are going to feel it's going to be bored. Imagine you are still waiting for this setup and you have not even taken a trade. You say, my entry is still forming. See, I'm still going to wait for 4 hours again. Can you see? It's very bored. It's not some people that you just see that, okay, my weekly is bearish. Let me rush to forward key level. This is my most recent breakout. They are looking for entry. They are just going to be taking unnecessary. They are going to be posting. One lose today, one man down. Tomorrow we go again. You go again tomorrow. You still start from 1 hour time frame. Don't worry, you go again and lose again. So what you just have to do is that you have to be very patient enough and stick to all this higher time frame. I'm still going to show us. I'm still going to show us more example. So what you have to do is that you have to stick to your higher time frame. Once you see that you are taking unnecessary losses, if you are profitable with your lower time frame, fine, do what works for you. I didn't say lower time frame is not good. Lower time frame is good, but you find yourself that I'm taking unnecessary losses on lower time frame that I'm just going 30 minutes, 15 minutes, and I'm taking just sticks to those higher time frame I mentioned for you, weekly, daily, 4 hour, 1 hour. Your last resort, maybe you can use 30 minutes, 30 minutes or 1 hour. So we know that, okay, we know that we are bearish now on USD JPY. We don't have any business to looking for buy opportunity. Are we going to see buys? Yes, because those retracements, when this buy want to come up here, when we want to buy to this side, we are going to see retracement. So we are going to see some buys to this side. It may take 2 days or a day to get here. But once these sales want to happen, once price get to that key level, the key level that price want to use, once the sales want to happen, it may be 2 candle or 1 candle, you see door drops to the downside. You can't compare the reversal to the expansion. So let me show us more example. We know that now we build our bias from USD JPY. We know that we are bearish. And how do we build our bias? We build our bias with single candle formation. Just single candle. We don't do so much. Single candle, we build our bias with single candle. The low of the single candle has been taken, we are going to the high. So now let's move to another page. Let me check XCU. XCU is going to be a good example. Let me check. Because I love XCU a lot. XCU is the king. So let's build our bias from XCU. XCU. So we have 2 ways to build our bias here. 2 ways to build our bias from XCU. Firstly, let's move to line charts, because line charts tell us a lot. So let's say we want to build our bias. Okay, I'll build our bias from 2 weekly time frame here. So let me start from the main move, the origin of the move. The origin of the move, let me go to line chart first. We can see that we have a V-shaped key level here. We have a V-shaped key level here. Let me go back to the candlestick. We have a V-shaped key level that price came into twice and closed with full body to the key levels. So as for me, as price came to that key level, closed with full body, are we going to continue to be selling? Yes, but we're going to say at that moment, we are going to wait for daily now to confirm. So now, no. We can see that this first week, we have a V-shaped key level here. We can see that this black handle, this is let's say this is 3 weeks ago. 3 weeks ago, we come to this key level. We see that we close with full body at in this key level. We come to trading journey on the next by the next week. This candle have not formed. Let me say this candle have not formed. So we see that this guy closed like this. So when this guy closed like this, am I going to be looking for a buying opportunity? I'm not going to be looking for buying opportunity at that moment. What I'm going to do, I'm going to move to daily. Let me circle this particular candle. That might replay tools. I can't find it, but let me just. So now we want to move to daily. We want to see maybe daily is going to give us confirmation here. Maybe we are going to see a breakout to the upside. So let's move to daily. Can we see? We can see that we didn't see a breakout to the upside on that particular key level. Did we see a breakout to the upside? No. We didn't see a breakout to the upside. Like, we didn't see a liquidity sweep or a breakout to the upside. What we can find is that we just see that daily low has been taken. So we see that we know that I'm staying out of this market. Even some people are buying. You said no, I'm staying out of this market, because it's 2 things I'm looking for. I'm looking for liquidity sweep and a break of structure to the upside, or a breakout. So, and I didn't see the liquidity sweep and a break of structure. Let me stay out of the market. Let me move to other pairs. But you have already marked that level. So now, you now see that the next week candle now came out. What we now find out here, that we see that the low of this previous candle has been taken. It swept the low. We can see that we now swept this black candle. We swept the low. As we swept the low, let me mark the candle that swept the low. And we said once the low of the candle has been swept, maybe in daily or weekly, we are moving to time frame lower. And we can see that this is weekly time frame. The low of that black candle, which is standing as liquidity for us, has been swept. Now we are moving to daily. We want to see two things. If the two condition is not met on daily, I'm moving to another pairs. I will just mark that level down. Like I will just mark, you just see one mark. I will just mark it, leave it. I'll be checking every day, every day, every day. I'll be checking every day to see my. So now we have marked this level, the weekly low that has been swept. So let's move to daily. We want to see two things, just two things. Everything about this trading is just a simple instruction. Simple instruction. My mentor, 4THMAN, that is my daddy. Always say something. He said his ability to follow simple instruction. Once you can follow simple instruction, I swear you are not going to have much problem. The simple instruction is that they have already told you. You don't have sense more than your mentor, or you don't have sense. I don't say okay. Let's say no, he's not your mentor. You don't have sense more than person that is putting you through. You want to use sense. You want to use sense. The person that is putting you through told you that once weekly high has been swept, wait for daily to confirm your directional bias. Maybe daily will give us liquidity sweep and a break of structure. So once you can follow the instruction, you are not going to have much problem. Are you going to take? I'm not saying you are not going to take lose. Like this game, we have like lose is the part of the game. But you lose like you can take 5 trade in a week. Eh? Maybe you have only one lose or two lose. If you follow simple instruction. But if you don't follow simple instruction, you can take 5 trade in a week. You can have 4 lose. Even the next trade, the last trade, you see, will be even break even self. So now let's move to daily. Because now weekly low has been swept, which we know that we have two ways of bidding bias. Single candle and key level. So the weekly low has been swept. Let's move to daily. Let me move to line charts. What can we find? Immediately this because this is the weekly low. This black stuff that are marked. That is the previous weekly low. So immediately we swept. You can see this. We swept the low. Then what can we find? We see a breakout on daily. We break out to the upside. Let me mark it out. We can see that we break out to the upside. Now that we break out to the upside, you will just call one of your two friends or three. You guys will be rejoicing that yes, so what they taught me it has been happening. It don't happen, no. But because I said daily have already break out to the upside, I don't say you should jump to daily now. You are not buying because you have called your friend that daily have break out to the upside as they taught me to let me set limit on daily. No, I will still advise you like what I used to. Is daily good to set limit? Yes. You can take trade on daily, which is not bad. I have many people that, but I will still advise you to move to the right time frame. Now that daily give you liquidity sweep and a break of structure, what are you going to do next? What you are doing next is that you are moving to forward time frame. So before you move to forward time frame, there are conditions that has to be met on daily. What are the conditions? You want to see liquidity attack on daily before you move to forward time frame. So where's our liquidity? Let me delete this guy. Let me delete all this guy first. Where is our liquidity? See single candle formation of serving and liquidity is already marked. This black can see that this is the candle that break out to the upside, that break this key level to the upside. Then we see the next candle serve as liquidity. And we have two things. We know that price is looking to attack liquidity. Then rebalance and only balance, right? So now we see that liquidity is resting on our daily key level. Okay. So as we see the liquidity is resting on our daily key level, where are we buying from? Is there any key level that is close to the liquidity? Yes, sir. Where is it? Let me mark it out. This is it here. We have a V-shaped key level that got disrespected many times, resting close to that particular liquidity. So now, price came to that key levels. Are we going to set limit? You can set your limit. I don't see. You can set your limit. It can even reduce your limit self. Can you see? You can set your limit. Put your stop loss below here, which is like 14 pips. Yes, it's like 14 pips now. Okay. Then you target 1 to 3. That's all. You don't have to do so much. But am I going to set limit on daily? No. I am not going to set limit on daily. I'm not going to set limit on daily. We have already know that we are bullish now because daily and weekly are in line. They are in line that okay, we are bullish, but we are still going to have little trust issue. It's not the little. Why are we having the little trust issue? Is because we want to manage our loss, our stop loss, and we want to confirm, want to have extra confirmation. Normal, daily and weekly is already aligned. The higher time frame, the bigger time frame is aligned. So me, I like to go on 4 hour time frame to even check also, to check three things: either liquidity sweep and break of structure or a breakout on that 4 hour time frame. Daily have already given me liquidity sweep and break of structure that I'm looking for. Now I have to be looking for my confirmation entry on 4 hours. How I can enter, how I can join the buy, how I can join these stuff. So let's see. Let's move to daily. Let's move to 4 hours to see what 4 hour give to us. We can see. So 4 hour did not came back, but 4 hour also give us liquidity sweep and a break of structure before the main move. 4 hour did not came back to the first. Let me go back to line chart. 4 hour did not came back to all this level here, all this level that because 4 hour is now confirmed that okay, I'm also in line. We can see that 4 hour give us confirmation entry that I'm also in line with daily, but price did not came back here. Price did not came back to any of this level. Are you going to revenge that okay, price did not came back to my entry upon how many days I've waited for this trade? Price is not going to come back to my entry. Are you going to revenge? No. What you are going to do, you are going to, I said this trade is going to look bored, lonely, because you are going to have enough patience. So we are moving back to daily because 4 hour did not give us our confirmation entry that we can use to join the buys. So the first move happened the first day. We didn't get into the market. So what we can see next, we can see that we have a consistent breakout here to the upside. After these candles, this black and these candles tap into this key level, attack the liquidity, we can see that we have an impulsive move to the upside. When we have an impulsive move to the upside, we know that now we are looking for only buying opportunity because weekly, let me go and mark the weekly high. Sorry, I forgot to mark the weekly high. Well, that should be our first target. Let me mark the weekly high. Yes. So this is our next target. So we know that we are looking for buying opportunity till all this till this high will be taken. We are looking for only buying opportunity. So now we are looking for buying opportunity that till that high will be taken. Now what can we find? After we have this breakout to the upside, we can see that the next day candle did what for us? Serve as liquidity for us. Resting close to this imbalance. You can see we have an imbalance here. So this liquidity is resting close to this imbalance. And we can see that this A-shaped key level here that sponsor, this is what we call plug and play. A-shaped key level here that sponsor these sales, you can see, sponsor these sales to the downside. Then God is expected again with an impulsive move to the upside. And single candle, you can even see this candle is even hiding the sweetest liquidity. In forex is when this liquidity is hiding inside of the candles, inside of the breakout candles. So we can see that this candle is hiding inside of these breakout candles. So if you are setting your limit on daily, you are good to go. Now that we are setting limit on 4 hours, that we see that okay, we didn't see our confirmation entry on that first move. So how can we join this second move also? Let's move to 4 hours because price have already came to attack this liquidity now that is overlapping inside of imbalance. Attack liquidity. So let's move to 4 hours now. We want to see three things: either liquidity sweep and a break of structure, or a breakout, or engulfing. I said, I like engulfing a lot. Once I see engulfing for 4 hours, I'm good to go. So we can see. Let me move to line chart. What 4 hour give to us? 4 hour give us a breakout to the upside here. Immediately 4 hour come to that key level, that daily key level. We can see that we have a breakout to the upside here. We can see that we have a breakout to the upside here. We have a breakout to the upside. How are we having single candle as liquidity? Yes, sir. Where is the single candle? This is it. It's hiding. It's hiding inside of this candle that gives us a breakout. You can see. So where is the nearest key level that price may play from? Because it's not because as the liquid as price if price attack liquidity, price may not come to this because we have many key, we have two key level here, we have this V-shaped key level. But is it close to that liquidity? No. Where is our closest key levels to the liquidity? This is it. This is the open close that is very closest to the liquidity. Then now you can now set your limit and move and join the buy to the upside. Let's move to daily again. Let's still move to the daily again. So that is the, let's say we catch the first move. That for the first day, you catch the first move for the first day. Where is our second buy again? We know we are buying to the upside until this high is being taken, right? We know we are buying to the upside until this high has been taken. So where's our second entry again? We are going to, every day, I said every day you wake up. You have to be checking one thing on daily. You have to check how the daily candle close. Where is the daily candle coming from? Even though you have already know your directional bias, maybe weekly we are bullish. You have to be checking daily. Okay, where is the daily reacting from currently? Where can I join the buy from? Where can I join the sell from? How can I? So you have to know. So now on daily, when the first move already happened, where is our second move that we can join the buy? Let's mark this. We can see that we have a shape key level here that sponsors buys to the upside, that sponsor this buy to the upside, then go disrespected again. Then we go disrespected again to the upside. Then we can see that price now came to this key level. We know this is our overall target we are still going to. So price tap into this key level, reject and close above. You can see tap into this key level, reject and close above. You can see this candle. Tap into this key level, reject and close above. What are you doing? What are you doing next? You are moving to 4 hours. You just be friend with 4 hours. You don't have any issue. Be friend with 4 hours. You see that you have enough patience and you will not be taking unnecessary losses. So let's move to 4 hours. We are expecting two things, then three things: liquidity sweep and a break of structure, or a breakout, or two consecutive candles to the downside that will create a bearish open close. Then price will engulf it. So now, what can we find here? We can see that. Let me move to the line chart first. Let me move to the line chart. We can see that we have a minor breakout here, but we can see that we have a minor breakout here, right? Yeah. We can see that we have a minor breakout there. And what I'm going to consider is first, because I said we are going to see two consecutive candles to the downside, the price is going to engulf it. What can we find here? We can see that we have two consecutive candles. We can see 1, 2, 1, 2. This is the line. This is the daily line. This is the first day candle that disrespects it. The next day candle, you can see that we have 1, 2 candles to the downside. Create a bearish open close on 4 hours. On 4 hours, see this thing. If daily just reject daily, as far you build your bias from weekly and daily. Once daily reject daily, just move to 4 hours time frame. If you didn't
I think his network got disconnected. We've learned a lot, and let's see how it goes. I hope we, actually practicalize all of this thing that he has been showing us, right? So let's see how it goes. I'll share the link. Remember, class holds Wednesdays and Saturday, right? Same time, 9 p.m. Wednesdays and Saturdays. Okay. And you can see we are at the Zoom max participants, which is 100. So I urge you all to come early. Knowledge is not limited to only seeing this thing. It is also you practicing it. You heard what he said. The ability to follow simple instruction, right? When a system has been built, you just have to follow how you have been taught and make sure you understand everything about it. Like then you will now start personalizing it, right? But for now, focus on the learning. Make sure you understand it. Next week we'll have, I think for Schofield, the almighty Schofield. We'll have him here for next week. So yeah, next week Wednesday,
we'll have Schofield. So it is better you come very early, click the link, and join immediately. If not, you hear sold out. All right, I'll see you guys in the next one, and I'll share the video to make sure you guys follow through. Make sure you practice it. Practice it. It's not enough to bring, even if we bring the highest tutor here on this Zoom, if we don't practice what they are teaching us, we're just wasting our time, right? So the little he has shared, make sure we practice it. And yeah, Wednesday, see you guys Wednesday, 9 p.m. And yeah, that's my time. Thank you.